Happy Friday morning, everyone. We have gotten to December 12th, and the market is going up for some stocks. The Dow had a very good day yesterday, up, I believe it closed at a record high. So, those 30 stocks that map to the Dow had a very good day overall. The NASDAQ did not have a good day. There were some big stocks that sold off in tech. So, it's a market that's rotating out of some big tech stocks into some more established older names that have been around for a long time, probably more predictable, steady businesses where we know what they do. We know what they're going to do likely in 2026, 2027. And that's not a big surprise. You have huge gains on some of these tech stocks and AI stocks, and investors maybe are cashing in those gains and rotating into something that's a little more stable, lower risk, lower beta, and setting themselves up for a 2026 where they could outperform. I am joined by Daryl. Good morning, Daryl.
Good morning, Victor. Hello, everyone.
And everybody, we're going to be looking at the market, and we're also going to be looking at stocks. We have a couple that announced their earnings yesterday. Fairly interesting what is going on with Broadcom, Costco, Lululemon. And what we do, we look at stocks in two ways. We look at the fundamentals, see how those businesses are performing. If you look at their revenue, are they growing their revenue? Are they contracting? Are they taking control of their market? Do they have very good barriers of entry, moats to keep their competitors out? We look at their margins. Are they a very profitable entity? Are they a very desirable company? And then value those companies based on the forecasted free cash flows, discounting those cash flows to a net present value in today's price, and also looking at the profits and seeing where it lands on a value there. So that's fundamental analysis. And then I turn it over to Daryl to look at technical analysis, seeing how the stock is traded, if it's setting up to go higher or lower. So I hope you find the analysis interesting. I hope you enjoy the stream, and we appreciate you joining. We have a new member to my channel. I appreciate it. Looks like Zilly 4452 is the newest member. Please get me your details over an email. Let me know what your YouTube name is, and I'll get you set up with all your perks. And I really appreciate it. While I'm at it, let me mention my paid member program. I have a paid member program where you can sign up at 4 different levels. It could be as simple as $10 a month. You can come on the live streams and you can mention a stock symbol. We could review it. And there are some videos I produce for value investors. Most of the videos that I produce, I release to advanced members or higher. And then 30 days later, I release them publicly. You also get invited to the Discord, to member calls. You get access to the tools you're going to see me use. You get access to a repository of the valuations that I'm producing. Super investors, they get everything that you see here for value in advance, but they also get a 30-minute one-on-one call. You also get videos produced for super investors. Conviction stocks that I'm seeing for that particular week. Also take nominations from these investors, and I think it's a really good program. And then last, platinum investors, for somebody who really wants a lot of research during a month. You can give me 3 stocks that I'll really research for you, and then real-time access to valuations as well as my trades. So take a look. If it's a program that might benefit you, I'd appreciate you considering it. And I hope You find the channel interesting. All right. So, looking at the heat map of what has been going on, speaking of this rotation, so we have a sell off in semiconductor, and it looks like we're going to go over Broadcom, but I think last time I noticed was still down. So, this rotation may continue today where you're seeing some sell off in these really high performing stocks. And you're seeing a lot of green in other spaces. In financials, you're seeing a lot of green. Now, lower interest rates, I would think, are going to benefit these companies. I think it's going to stimulate economic activity, a lot of new mortgage applications, refinancing, lines of credit against homes. A lot of stuff's going to stimulate activity for these guys. So, companies like Visa, they don't really care about interest rates, but they appreciate when low interest rates are around because they charge a particular, call it a toll, a fee for using their network. So this particular sector did quite well yesterday. Industrials rose nicely. And healthcare, some spots look good, but Daryl, what sectors do you think will do well with lower interest rates in 2026?
Small caps have been doing incredibly well. And I think financials will do well. Anybody that needs to borrow money, the industrials should do well.
Yeah.
It's been a little interesting because even the high tech stuff will do well when interest rates are lower because it helps their valuations. Not necessarily that, well, some of them are starting to borrow money now, but most of them don't need to borrow money because they have so much cash. So interest rates don't impact them that way, but it does affect their valuation. So anyway, financials have been doing really good. Small caps have been knocking it out of the park. They're trading at all-time highs right now.
And yeah, I think you're right. Small caps are rallying. So it's healthy to have a rotation. That way we can figure out how to make money in 2026, how to get into some stocks that are going to perform. So we'll see how that continues to evolve. All right. So we already have a few comments. Kurt, good to see you. Nice job finding Upwork earlier this year, up 90% since August. Go Upwork. What is going on with the gig economy website? And I really like the Upwork business. You think about, is the gig economy getting bigger or smaller? I think it's getting bigger. Look at that beautiful chart. Oh, man. Look at that. Well, I hope you made some money on that, Kurt. Looks really good. And Upwork, the whole story on Upwork, I really like the story. And the only thing that I was getting a little impatient around was their growth. Let's see if they fix that. And no, they're still growing at a slower rate, but I think the market is picking up that, hey, these guys are probably gonna do well in the future, just with regards to their model. Like, hey, the model for Upwork really makes sense in today's age where a lot of people are either doing side work, to either work in an area of interest or to make a little side money, to kind of have a second job that's flexible. They could, have an Upwork account and do some work that they're qualified to do. You could also have people in another country serve, across borders. I mean, there's just a lot of potential there. So it's good to see this stock rise because it has not shown me the terrific, revenue growth that I would expect this area to do. When I compare it to like an Uber, which is gig work, you got people driving their own cars and giving people rides. Well, their growth is far better than Upwork, and Uber is gigantic. Upwork is small. So that's one of the things that I keep an eye on. But it's great to see the stock's really gone up. Good job, Upwork, or at least the market's really paid attention to Upwork. It had a terrific day. And this aligns with the comment you made earlier, Daryl, that small caps are getting a bid. Well, this is a small cap, less than $3 billion in overall market cap. It does have a really low PE. The valuation's good. I could show it to you. They're discounted. But again, I'm looking at this revenue number, and this revenue tells me, are they getting more customers, or the customers excited about using the platform? And right now, I'm a little bit nervous about it because the 2.5% growth over the trailing 12 months doesn't tell me that. It tells me the opposite. Hey, they're losing momentum. So if they could fix that, this stock should rise quite a bit. We'll see. Thanks for bringing that up, Kurt. Good to see you. And Kurt wants us to look at Opera. And Opera is a browser company. I'm going to put that on the list. Looks like Peyton is on. Carvana's going up. That'd be a good one to talk about. I'd love to get your comments on Carvana. Just from a big picture perspective, I don't know that the used car market is going to be great next year, because the new car market, there's plenty of inventory and there's pretty good deals going around. When Carvana was flourishing was when we had a shortage of cars, and you had that shortage led to people pretty much dealing with scarcity and paying higher prices. It really increased the value of Carvana. I don't know what economy is going to be. I don't know if the situation and economy in 2026 is going to help Carvana, but let's talk about it a little later. All right, so we have a couple of earnings that we wanted to cover, but before we do that, I think Daryl wanted to share some stuff that he was researching with regards to earnings per share, overall earnings per share for the S&P or the market. I thought it was really interesting. If you want to cover that, that'd be great.
Yeah, so I'll make this a little bit bigger here. So this data is provided by FactSet, and they do a bottoms-up estimate based on all of the analysts that are providing EPS estimates for the S&P 500 members. Next year, it's currently sitting at 309.22, which is the highest we see over this time period, which looks to be 14 years. And he made his statement in the post that over the last 25 years, analysts basically overestimate 1 year forward by 6.2%. So if you deduct 6.2% from that, you end up with a EPS next year on the S&P 500 of $290.11, which is still a record. And then there were some years where we had major events that drove estimates down. If you remove those 4 years, they overestimated by 0.9%, which would give us a target of 306.34 next year. So all interesting numbers that they are expecting record EPS, even when you adjust it for their typical overestimation. Next year still looking really good. And then if we look at just the fourth quarter of this current year, last quarter and this quarter represents 2 times when analysts have actually increased estimates during the quarter. So we have 2 consecutive quarters where that's happened. That hasn't happened since basically 2021, where we've had 2 in a row. So October and November, analysts increased EPS estimates slightly for the fourth quarter, and this will make the second consecutive quarter during this year. And then if we look at just the earnings adjustments for basically October and November, you can see where the adjustments were made. Infotech at the top and consumer staples at the bottom. So anyway, kind of interesting research and gives you some kind of idea what analysts are expecting for next year.
So overall, this is going to be a help for stocks to go higher. It's going to be a tailwind if we see higher earnings per share, more enthusiastic earning reports. We should see higher stock prices. So that'll be good.
I think so.
Combined with lower interest rates. And what does that have to do with stock prices? If an investor's looking at, hey, I made extra money, I made an extra $30,000 and I've got it in my bank and I have it in a CD per, maybe paying me 4%. But next year you wake up and the CD's only paying 2.5%. You're like, geez, I'm not making any money on that capital. Maybe I could take a higher risk in a stock and earn a better rate of return. Maybe I can get in a dividend stock. And that move from fixed income, low risk bonds or CDs and so forth into the stock market is a demand for more stocks. It raises the stock prices. So I'm expecting that's also going to have an impact on stocks in 2026, 2027. All right. Nice work there, Daryl. Thank you. So we're going to get started with Broadcom as the first stock we're going to analyze. Broadcom's a big, big cap. It's almost $2 trillion. And this has just been on a tear, up 891%. Beautiful. Just an incredible rise over the 1 year, 136, year to date, 75%. So a couple of days where the stock's been selling off, I don't think is a big deal, but it is selling off after it announced its earnings yesterday after the market closed. And initially, I recorded a video on Broadcom soon after they announced, and my conclusion was it's a sell stock for me. It's just too expensive, and I'd rather buy NVIDIA or other semiconductor stocks that are priced better. When I recorded that video, the stock was trading higher by 3.5%. And I think they had their earnings call, and I think the investing community had time to think about, I guess, more data, maybe preferences on the stock, and a lot of investors are selling. So I think that maybe the stock's gotten a little too expensive, a little too rich for some investors, and they want to take the gains, maybe rotate into a different industry and sector. Because if you look at the PE ratios, these PE ratios are really high. And analysts do think it's priced too high. Now, the discount I concluded with on Broadcom was around the neighborhood of 9% based on the probably best case scenario for their revenue growth, as well as everything else that follows, like the level of profitability and free cash flow. Now, this here, it was good to kind of cover, Daryl covered earnings per share estimates. These estimates are really optimistic for Broadcom. We're operating in the year that ends November 2nd, 2026. So their fiscal year, we're already in this year. And it's expected that they're going to grow at 39.5% top line and then 32% the year that follows. Those are really good growth rates. Now this year, they grew at 23.87, the year that just completed November 2nd, that they reported. Now that number is not overly fantastic. It's a good, very good number, very good number. It's just not comparable to Nvidia. And this is kind of like the growth rate for Microsoft. This is the growth rate for Meta. And they get a PE ratio that's far lower. So how come we're accepting a really high PE? Now, if these numbers are a reality, if Broadcom comes in at 40% growth in 2026 and is guiding to basically be in mid 30s growth in 2027, the stock price should stay where it's at. But if they have any inkling that no, we're not going to hit 40, it's going to be more like 25 or 30. Whew, this stock is going to unravel and it's going to sell off hard. So this is going to be difficult for them. They just had a very good year, but growing at 40% is going to take a lot. And we're already seeing some pullback in semiconductor. Meta came out and they said, hey, we're pumping the brakes on spend in the data center. And they scaled back. They had messaged in their earnings call that happened at the end of October, hey, we're going to spend about 75 billion. And the market pretty much threw up on that. They're like, no, man, that's terrible. And it sold off to stocks. And then Zuckerberg came out more recently, said, you know what, we're going to take 30 billion off that number and we're going to moderate our spend in the data center. Well, that has a direct impact on what we're talking about here. If more businesses are in that mind, headspace of maybe we got to scale back because this AI thing is really expensive. And man, if Meta, who's doing really well with cash flow and everything, is scaling back, maybe we'll see. So for now, I think Broadcom is, for me, not an investment I'll have. I've bought Broadcom. I bought Broadcom, made money, got out. I probably got out too early. Probably left some money on the table. But I know Broadcom. I know them well. The PE ratio is 42. Again, that's based on a really high growth rate that we're expecting for 2026. And it's going to come down to 31, again, based on the growth rate, and then 25 if they keep growing. So this is a forecast that would be phenomenal for them to pull off because Broadcom is not in a same position as NVIDIA. NVIDIA has a GPU that can't be replicated. Their high performance compute can't be matched. Nobody can match it. AMD argues that, well, we kind of get close. Maybe you do, maybe you don't. But Broadcom sells semiconductors that are not easily replicated, but I would say there are more alternatives available for the kind of compute that Broadcom is providing. And if their prices are a little too expensive, companies can find alternative ways for them to do. And I think where Broadcom is shining is not in the large language build out, but it's actually in the inferencing phase of AI. And if companies can find, hey, you know what, Intel or Qualcomm or, AMD, they have chips that could do the inferencing comparable to what Broadcom can do. That's going to be a competitive situation for them. We'll see. So that's what's going on there. And my conclusion that I got to was I thought that their stock price was priced a little too high in the alternatives for me because we are in a market of stocks. It's not like Broadcom's the only semiconductor stock available in the market. No, there's like 20 of them. Which one's the best investment? And I think there are alternatives that I can invest in that have better fundamentals, a better valuation, and I feel I can make more money on better appreciation in 2026 and 2027. So Broadcom was a sell last night while the stock was rising, by the way. It's like some enthusiasm was facing some enthusiasm, and then it made a turn and it started to sell off. And it looks like we're going to open in 6 minutes, and this is going to open lower. Let's see how it trades today and how it trades over the next couple of days. So we will see. What are the charts telling you about Broadcom?
So this pullback today will put them pretty much right at the 21-day EMA. And I also added a trend line early this morning through here that touches several points across this time frame. They traded a little bit below it. The 21-day is just above that trend line. So it looks like they're at least going to pull back that far. We'll see how they trade intraday. When I looked at the intraday chart, I don't actually have it for this one. Let me go to extended hours. We can see since it sold off in the aftermarket, it did rise a little bit, but it's still pulling back. I do see a little bit of an increase as we get closer to the market open. The one thing that's a little concerning, but it has been above this 200-day for quite a long time. They're like 50% over their 200-day. Let me go back a little further and see how frequently they test that 200-day. I see at least September of 2024, they tested it. In end of 2022, they were testing it as well. And during the tariff tantrum, they also came down below that. So keep that in mind. 200-day would put them closer to 279, and we're trading yesterday at 406, and they're going to open up this morning about 383, I think. They do have accumulation, which is at a 52-week high, and the money flow is still very positive. I do see a negative divergence here on the RSI, so that's always a bit concerning. Whenever you see higher prices with lower RSI, that's usually a concern and typically comes back and bites at some point.
Man, the stock's selling off even more, the Broadcom stock.
Yeah.
So I think it's going to be a rough day. It's been a rough week for the data center. And I think there's some caution being exhibited by investors where, is it really going to go up higher? Are we really going to spend that much money on data center? And most definitely for the last couple of years, these stocks have been on fire. And we'll see how that plays out. So our newest member, Zilly, has a request. Good to have you, Zilly. And please get me your email address. You can email me at victorhinvesting@gmail.com. Mention your YouTube name, and then I'll get you set up with all your advanced member perks. And I really appreciate you joining. So let's jump into Apple. It's been a while since I've looked at Apple, so it'd be a good one to look at. And Apple, not doing much today, but what are they doing for the 1 year? Up 12%. That's pretty respectable. For a while, Apple was, kind of struggling, and it picked up a lot of investors that were treating it kind of like kind of a safe place to put money. And overall, I think it's very respectable that they went up 11%. 5 year, 125%. That is getting the job done. That is, you put some capital in here, you put $25,000, you wake up 5 years later, you got in the neighborhood of $55,000, $60,000. maybe $65,000. That is getting the job done, folks. That is getting it done. $4.11 trillion market cap. And meanwhile, Warren Buffett's been selling off the Apple stock and selling pretty good share counts, but they still own a ton of it, right? They own a lot of Apple. Forward PE for 2026, the PE is 33.72. Analysts think there's a little discount. When we look at Apple, they have been doing a better job. It looks like they closed their full year on September 27th, 2025. You see that growth. That is good. For a while, I've been like, man, Apple, how can you have such a high PE and not be growing? And they started to grow. So look at that. Looks pretty darn good. In the quarter, 8%, 9.6. So the growth has been fairly good. Have to admit. And free cash flow. This is I think NVIDIA can probably learn a few things from Apple. These guys produce upwards of $100 billion of free cash flow. They are like the world's biggest ATM machine. And Warren Buffett has his ATM card. He's at the head of the line. He has so many shares. With that kind of cash flow, they've been buying back shares, making the share count more scarce. And I think that's helped the stock price. They also have really good products that people really appreciate. I must admit, like the quality's there, security's there. It's a good device. So good for them. It's a big success story. They've been around for a long time. It's not like, hey, they started 10 years ago. They actually were part of the PC. I don't know if we call it a revolution, but they were part of the whole PC innovation wave. Way back in the day, Steve Jobs and Wozniak. And this is what's funny. I'm wearing a t-shirt, Atari. And that is where Steve Jobs and Wozniak met. Atari designed upright video game machines like Pac-Man, Asteroids, Robotron. You know what I'm talking about, Daryl?
Yep, I remember them.
That was the original video game. None of this console or PC stuff. You'd put quarters in. You'd put all your allowance money into this machine, and you'd play video games. Well, these guys worked at a company, Atari, in Northern California. That's where they met. And then they collaborated and they created a PC. And their version of the PC just aesthetically was better than PCs that were being produced, because PCs were being produced almost like, and this is the 70s, okay? This is like a long time ago. And PCs were being produced that were more like kits. And they were kits for people that really knew what they were doing. Because in the 70s, PCs, people didn't know what they were doing. And Apple became very popular because they actually delivered a product that was aesthetically good. It was solid. It was quality. And they've always maintained that particular brand of, hey, when you buy an Apple, you're buying quality. And you're buying something that's been well thought out. It's not like, the PC works, but I had to like do a couple, workarounds or fix some of the issues the manufacturer should have thought of. No, Apples are usually like, no, they're solid. So long story, a little shorter is they took that business. They were bankrupt, by the way. They were bankrupt around 2002 and Microsoft bailed them out. But they took advantage of the handheld device market, and they took that for a ride. So that's quick history. I don't think it was quick. That was a history on that. But let's get back into valuations, because I kind of get geeky around that history. So gross margins, 47%, profit margin, 27%. So we know what great looks like. Okay. Great looks like high growth, high profit, high cash flow. And Apple has the high net profit margins and high cash flow. It doesn't have the high growth. So it's almost perfect, but it's not. It's got a little flaw there, the growth. It's growing better, but it always be kind of like the area of concern for me. 28 analysts cover it. What is their forecast? Growth. And holy smokes, 11%. If they hit 11% growth, because these guys are a massive company, they're going to hit $461 billion of revenue. Man, that's a lot of iPhones. That is a lot of EarPods. That's a lot of iPads and Macs and all that stuff. And we've got revenue growth persisting into the following years. So if they hit this forecast, this stock's in very good condition. Okay. Earnings per share is going to drop into the 20s. So that looks pretty darn rational to me. The PE is a little high. Again, we're working in a market of stocks. And that market of stocks provides opportunities like Meta, Google, Apple, and Nvidia. And I think you can get Nvidia for a lower PE. You can get Meta for a lower PE. Google's getting up there. I think Google's about 30 PE. I'm just pointing out you can get better growing stocks for a lower PE. So that's one thing that I would reflect on. All right, so I'm going to kick it over to Daryl, and I'm going to update my valuation because I feel like I need to update a few numbers because that forecast looked pretty darn good to me. Over to you, Daryl.
Okay, so this cup and handle formation has been in play for the last 2 months. I drew this on there 2 months ago. They hit a peak back in December of 2024 and early 2025, and they spent until October getting back to those prices. And then they formed a small handle. They pulled back and broke above that and have been going up since. If you measure down from the right side of the rim to the low and then add that back to the price at the rim, that'll give you a price target of 332. So this has been sitting here for at least 2 months when I first drew this cup with handle. So it's slow progress, but they are making a little bit of progress. We'll see. They've been pulling back since the beginning of December. They pretty much held the 21-day moving average for the most part, especially since about July. They've been holding that. They're trading just above it today. Remember, Broadcom was 50% above the 200. Apple is only probably 21% or so. So I don't think they're nearly as overextended as Broadcom is. The 21-day, 50-day, and 200-day are all moving higher. They do have positive PPO. They do have positive RSI. They came back below the 60 line, and now they're trying to press back above that. So that would be something to keep an eye on. And accumulation is pretty much at a 52-week high over the last week or so. There's been a little bit of distribution. The money flow is pretty much in a neutral position right now. So this is my price target based on this cup with handle pattern. And we'll see how long it takes to get there or if it can get there.
Thank you, Daryl. And I finished my evaluation, but my Google lookups are it's Friday morning. They're a little groggy. They're not looking up. So I've been hitting refresh and trying to get them to update. So bear with me, everybody. There we go. So let me take you through my valuation here. And so Apple has very good free cash flow, and I'm growing that cash flow by 10%. That's aligns with their forecasted growth. And then I'm going to grow cash flows in 2, 3, 4 by 7%. So the first 4 years, that's their forecast. And then beyond that, it's going to grow by 4%. It gives me a pretty big intrinsic value discounted by 7.5. I add cash, take away debt. I only get to 2.8 trillion, and that falls short of their current market cap by 31%. On the earnings per share, again, I cannot give them a PE in the 30s. It's not growing well enough, and all that. I'll give them a 25 just to see where they align, because I have other alternatives that I could buy at a PE of 25 or so. And I get to a stock price that's too high. It's high by 27%. And I've been citing that Apple has been too expensive for a while. And I'd probably say that, it's a stock that a lot of investors feel comfortable with. Of course, it's Apple. And looking at the max, right? This thing's gotten the job done for investors that have been in Apple for a long time. So that type of performance has a lingering impact on the psyche of the investor who's thinking it's just going to keep going up. Okay, I get that, but I don't invest looking at the rearview mirror. I look at fundamentals and what's this thing going to do going forward. And the expectation that the company wasn't going to grow, because they're in a way really dependent on that iPhone. It's a single product, where other businesses like, let's say, Google, they don't just depend on search anymore. They have YouTube, they have their Google Cloud business, starting Waymo. And I could cite other examples where these businesses are making themselves more diversified in where they get their revenues. Apple hasn't been able to accomplish that. They were trying to create a car that would be a self-driving car, but they decided to cancel that program. And they're showing up a little late to the AI race. I don't know that that's going to hurt them a whole lot. To this point, it hasn't hurt them. So my kind of intuition was they're going to have a hard time growing. I probably started saying Apple is not a good investment way back here. So I think the market's really taking the stock higher. I get it. It's a market of investors, and they invest based on their criteria, and they feel that Apple's been a good investment. For me, it hasn't been an investment worth putting my capital into. And for me, Apple is a sell. I'd rather be in Google. I'd rather be in Meta. I'd rather be in Amazon. And Amazon's a terrific opportunity. And Amazon, I think, is being doubted and will really, really benefit investors over the long haul, in my opinion. So I appreciate you asking, Zilly. Great to have you as a member. Again, please email me, mention your YouTube name, and I'll get you set up with all the perks. Looks like Anderson. Good morning, sir. Good to see you. Thanks for the super chat. You want to look at Vale, which is an oil company, especially on a good exit sell point for the stock. Yeah, let's take a look. And while I'm here, so how come I have, because of value. So I'll look for it. I think it's around my oil stocks. So give me a second. I want to see if I have a valuation on them. I have a lot of energy stocks. All right, no problem. We can create one. Okay, so Vale, I believe, is the company down in Brazil. Vale SA, together with its subsidiaries, produces iron ore, nickel in Asia, the Americas, Europe, internationally. It operates through Iron Solutions Energy Transition. So material stocks, some of them have just flourished this year. I made some money on a material stock earlier this year. It took the money and ran. And these guys here, let's take a look at their website. So they do mining.
Got a little spoiler alert here. Materials is supposed to be the best performing sector next year.
All right. Okay. The momentum builds. So these guys do mining, and approximately 80% of the energy consumed in our operations in Brazil is supplied through self-generation, primarily hydro, solar, wind. Okay, cool. And logistics. Okay, so mining company. Let's take a look at. This is the product they produce, probably exporting to China quite a bit. Year to date, beautiful. 1 year, excellent. And they pay a dividend. I love these stocks. I love these stocks when they take your capital and move it up 40% and they pay you income. What else could an investor want? So it's a very good investment. These, you see that it was on a pretty drastic drawdown, going from $22 a share down below $9 a share. But it's not where the stock's been, because if you look at the rear view mirror, there's a lot of wreckage behind you. It's like, holy smokes. But the road ahead ended up being quite good. And the fundamentals could have told us that. And I play into materials and I have an exit strategy because they tend to do this. They tend to kind of have periods when they flourish, then they sell off. Now, next year, from a big picture perspective, I think that with the tariff arguments and negotiations, I don't think they're going to be as bad in 2026 as they have been in 2025, especially in early 2025 when we had some big tariffs put on China. That really created an impact on stocks. And I think economically, businesses were probably like, whoa, how much steel are we going to need? But now I think going into 26, I think steel is going to be a necessity. China's producing a lot of product. China's exports have been really at very high levels, I think at record levels. They're probably getting a lot of their steel from Vale. Okay. So I think the market's going to be good from an economy perspective for Vale in 2026. Moving on. So their growth hasn't been there, probably because the commodity prices have not been in their favor, but we have some green showing up on a couple of the last quarters. The trailing 12 months has a little bit of green. When we look at the forecast, we have 8 analysts covering it. They think there's a tiny discount of 1% available. But more importantly, is we look at the forecast that they have, they're thinking it's going to grow in 2026. It's going to have a little persistence of growth in 27 and 28. Those are good numbers. And the forward PE is quite high. That is interesting. Why is the PE so darn high? Okay. Their profit isn't expanding. If the commodity they sell, if the prices go up, that's going to help them make more money, have better cash flow. Let me take a peek at their free cash flow. And they do generate good cash flow. Not as good as back in the day, right? 23, 24. That was some tremendous cash flow. And you saw that the stock price was like at 22. I think that's where it was peaking. And once it started to show that, hey, we're not going to have as much cash flow, the stock has really suffered. But it's beginning to grow again. So that looks good. 16, and I'm going to venture to guess that's in US dollars. No, it's in the Brazilian currency. So I have to do a translation on that. Okay, so let me kick it over to Daryl, and then I'll work on a valuation.
Yeah, so I went back 15 years or so at first. And this is these prices we had in 21, 22, and 23 were prices that we were seeing back in. Well, we have to even go up more than that, go back even further. Yeah, we have to go all the way back to 2011 to see prices at this level. So I'm going to draw this as a resistance point. We'll just go back 3 years and 3 years and 5 years actually, and use that as a resistance point. So I saw an early report from FactSet yesterday. I don't have it in my hands yet. So hopefully by Monday we'll have this and we can look at the expected earnings increases for the materials and price estimates, along with all the other sectors. But I remember seeing that materials is at the top of the sector parade for next year. So I see some other requests for like Dow. They're in that particular area. LYB, LyondellBasell is in that area. I own them. So I'll be very interested in getting that report and seeing what to expect for next year. But if we take this into account, it looks like our upside at the moment's about 8%. We're going to be facing some pretty significant resistance that's been around for 15 years. So let's drop down to just 1 year. They're trading quite a bit above their 200, about 30%. The 5-day is decreasing slightly. The 21-day is still increasing. If this is something you still want to add to, then anytime it hits this 21-day would be a really good entry point, it looks like to me. They're just 2 or 3% above that. They are staying above the 50 line as far as RSI. They have been since the 1st of August. So they pull back and they're holding that 50-day line. And if you remember when I looked at Broadcom earlier, we saw a negative divergence in the RSI. So we were having higher prices but lower RSI with each subsequent push higher. Here, we're actually pretty much the RSI is flat. So as we reach new highs, we pull back and then we reach a new high and the RSI is pretty much at the same level. So we have an RSI that is not diverging. It is riding along with the pricing. That is a positive thing. They are right at 60 today. As recently as 20th of November, they pulled back to that 50. The PPO has also been positive since the 8th of August. Accumulation distribution is pretty much flat, so they've spent about as much time in distribution as they have in accumulation. So this represents money flow into the company. So the only real risk that I see is just we're so close to these resistance lines that have a long history. But if you still want to play it, I think the 21-day is a good entry point. And then Monday, by the time we get that report, maybe we can talk about these again and see what we expect based on the earnings estimates for next year by industry group.
Thank you, Daryl. Excellent work. All right. So materials stocks are volatile. They go up and down, and so do their revenues and profits and so forth. So this one here, I've gotten to a valuation that shows a 16% discount. And I think you asked, what would be a good exit strategy on a stock like this? I would say that I own TX, which is similar. They do rolled steel. They operate in Latin America, have similarities to Vale. I'm holding TX. I'm buying more shares of TX on opportune periods. I think the economy is going to be good for this particular industry. So I'm holding my TX shares and buying from time to time. And Vale, I think there's some things that can happen that are going to take the stock higher. So I don't plan to exit TX, and I wouldn't if I was a Vale stockholder. I'd probably, if it went up to its fair value, I'd probably cash in maybe at least 50% of my shares. But I think it has some upside. I think it could go higher. This is not financial advice. It's just analysis and opinions. But that's how I see it. I think the material space is looking good for 2026. The economy should do well. You have a lot of products being produced. You have cars are coming out of China like crazy, and they're filling markets with these affordable EVs. You have a lot of products coming out that require steel. So Vale, TX, and other materials companies should do well. And I hope you found the analysis interesting. And again, material stocks are not a place that I stay forever, right? Even TX, if it goes up more, I'll probably have to cash in my chips. And the stock that I made some money on, AMR. So let's look at AMR real quick. So I noticed AMR because this famous investor was in it and he was losing his shirt. He was losing his shirt. Man, he was just getting killed. He's like optimistic on this company. And AMR does metallurgical coal. It's like the stuff that you then use to create steel. And it's not the rear view mirror that I got to focus on entirely. I just thought, picking this sucker up at the right time is a good idea. And yeah, it was a good idea. But I told myself, and I told you guys on live streams and member calls, that I'm gonna invest in Alpha Metallurgical, but if it hits 50% gain, I'm out. It hit that number, and I got out. And guess what? It hit that number fast. So I got out. All right. See you guys. See you guys, other investors of AMR. And it did it over the course of like 2 months. And that's fine. And I got out because I know that this business could also have periods like this where investors are like, whoa, what happened? How come I'm down 70%? So this was a 2025 successful in, and I'm not going to argue if the market wants to say, hey, you know what? We took your shares and made them a lot more valuable. I didn't ask any questions. I just sold, made my money, moved on. So, but look, it keeps going higher. But I stayed with TX. TX has been, to me, TX is more stable, and it's been doing great, pays a nice dividend. I need more stocks like this in my life. Pay me a dividend, go up in value. See how we just saw 3 material stocks, and we got that comment from Daryl saying material stocks are going to do well next year. But they don't do well all the time. So the 6 month for Ternium looks beautiful. But you look at the 5 year and that story that ended, it was like, what's a positive story? I don't know. Forrest Gump. and it turns into a nightmare movie where, oh my God, I bought at the wrong time, and this stock's really gone up and down and become a nightmare. Material stocks, interesting space for 2025. Great to have you, Anderson, on the stream. Great to have you come back over and over again. It's been nice to have you and your comments. Hopefully you found the research on Vale interesting. And, the comments on exit strategy, it's your decision, but the space may do quite well next year. So, yeah, got it. Good stuff. And I think Brazil has some advantages, right? They probably have a lot of minerals. They have big country with lots of stuff. So great to see you. All right, guys, it looks like I'm way behind on the chat. So I apologize for being a little slow on the trigger here. But let me try to catch up here, and then we're going to take a peek to see what's going on with this market, see what it's doing. Is it going to help us end the week on the right foot, or are we going to take a headache into the weekend? Well, that isn't too bad. That isn't too bad at all. Let's take a look at this heat map. Whoa, Broadcom, holy Toledo, down 8.95. It was roughly a $2 trillion market cap company. So 9% of 2 trillion is, about 180 billion, right? So not quite 180 billion. It's gotten down 160 or so, $160 billion of capital have left the Avgo stock. That's a lot of billions. Where are those billions going to land? Well, some of them are, God dang it. So I picked out Visa. I don't know if I mentioned it to you about a week or two ago. Said, Visa's looking good. And I did not pull the trigger, and it was up 6% yesterday. It's up 1% today. So this capital from semiconductor and its supporting space is making its way a little bit to software applications. It's making it over to Netflix. Telecom, which is a nice safe space. Looks like aerospace and defense catching a bid. Look at real estate, nice and green. Utilities. Here's materials. United Health on a nice little run. Good job, United Health. And some consumer discretionary. Consumer discretionary and Lululemon's a stock that I wanted to cover if we have time. They had a very nice earnings, and it's got to hurt the CEO that's going away. They announced, hey, the CEO is leaving, and the stock price is flourishing. It's like, oh no, that's not the right signal, right? When a CEO, we're told that a CEO is leaving, then the stock flies up. He was maybe part of the problem. All right, so that's what's happening with the stock market at large. Let's take a look at some member comments here. Let me catch up. So Kurt, I have Opera on the list, so hang tight. We will cover Opera. Peyton, I put Carvana on because I wanted to take a look. And I'm not sure what this comment means. So I can't comment on it because I don't know what it means. So Japan Deck, thanks for tuning in. Shadow Guy, good to see ya. Stingray Rasta, back for some more. Thank you, sir, for returning to our stream. Dwayne, good morning, sir. Hope you're doing well. Mike, the dividend investor guy, wants to look at LNTH and Dow. Dow is call it a chemical company, material stock. I like Dow. I like some of the fundamentals. Just the market has not bought that darn stock. But maybe now is a good time. We will reveal what we see with Dow, the stock, not the Dow index, Dow, the stock. It's a material stock. Shadow guy. Yeah, bonds. The bond market might, one investor here, but I don't know that I'm going to put a whole lot of capital into bonds in 26, 27 because I'm afraid that we're going to first yields are going to be terrible. So all the bonds that I hold right now are going to go up in value, price, which that's fine. But yields are going to be terrible. And I just don't want to be holding a lot of bonds when we make the turn and rates start going higher, then bond values drop and you can really get hurt. It's like, oh, great. My bond, I bought it for $1,000. It's now worth 950 and I'm being paid only 5%. It's just not a good moneymaker. So my plan with bonds is I'm going to slow my investing in bonds in 2026. I'd rather go into some dividend stocks. If I'm going to go safe, I'm going to go dividend stocks, or I'm going to go into safe stocks. So my safe money is going to be in safe stocks, not bonds. What are you thinking about that statement? What do you think of that statement, Daryl? Does that make sense?
I like it, and I hear that being pushed around in the media as well, which may or may not be a good thing. But they're thinking dividend stocks are going to do pretty well next year.
Yeah, and I created a best dividend stock video for advanced members. Released it a day or two ago, and some good ideas in there. Take a look if you're a member. So, Mike, the dividend investor guy, remember your comment yesterday about Adobe? Well, it's up again. I am happy, sir. I am happy that Adobe is up. Now, I'd be very happy if it's up a lot. Let's take a look.
It is gonna hit the 200-day here pretty shortly. So
this has been kind of a little bit of a long, play out of a stock that's been really the doubters have been like, oh yeah, AI is gonna really hurt this business, yada yada yada. We've talked about this stock. It's unbelievable that a company that continues to grow consistently the way they've been growing, that the market cannot look at the facts. Revenue growth, we know what great looks like: high margins, high profitability, high cash flows. The market's just like not taking the facts into consideration. So this run that it's beginning, I think, is going to be a longer lasting run. I am throwing capital at Adobe. I threw a lot of capital at it, and I'm not a day trader, but it is fun when in after hours, this stock was down. After they announced earnings, they were down 2%, maybe a little more. I bought shares in after hours. And from that point to where it went the next day, I probably made 4% on that investment. So I'm happy that Adobe's rising. I'm also happy that that's going to, the whole space, CRM, Adobe, Intuit, Monday, the whole software space, I think, is going to be viewed through a different lens going forward. I think there's going to be some money made in software stocks in 2026. I think I'm going to make some money in software stocks in 2026, which is why I have a long collection, a nice broad collection of software stocks. And I'm ready to buy when it comes to software stocks. So good to see you, Mike. Thanks for the note on Adobe. Magical Self. Yesterday, you discussed NXT as a buy. You want to talk about position size. Let's talk about NXT. And I'm going to show these fundamentals. These fundamentals look so darn good for a clean energy stock. They do products that go into commercial solar installations, and their free cash flow generation is phenomenal. I'll show that to you in a little bit. Thanks again, Anderson, for coming to the stream so often and for the super chat. Yeah, so I do mean REITs, Shadow Guy, when I talk about dividend stocks. A dividend stock that I have really liked recently, the only thing I don't like is it's been going up too fast because, like a lot of investors, I would love for a stock to give me an opportunity to buy a bunch of it when the buying is good. And Target has really been rising just consistently. And this is a stock that I picked out like right around here, and I was able to buy some shares. Well, when I started buying, I was getting a 5% dividend. Now it's down to 4.67. And the forecast looks terrific for Target. So yeah, REITs like CTRE, I own a lot of CTRE. I love the big picture of CTRE. Pays a 3.7% dividend, but more importantly, it appreciates. So it appreciates over time. And really, if you buy at the right times, $16 to 36 is way better than a 63% return. It's way better because I've more than doubled my money on Care Trust and it's paid me income. So nothing wrong with that. Nothing wrong with that at all. So I'm buying more into CTRE. I did a best and worst real estate stocks. And the other stock that really showed up that looked terrific was Vici. Now, Vici scares me a little bit because I just hear all these negative stories about Las Vegas having a hard time, not being able to attract tourists. And I think it's probably ailing this stock. But the fundamentals are terrific. High dividend. It's really suffered a really big drawdown. But what if the stories are a little exaggerated? Well, that might be a good idea. I'm not in Vici. I'm a little afraid of it. And CTRE is treating me so well that I'd rather just stick around with CTRE. I like their business. Their business should do great in the future. It's not the biggest market cap in the world, but it has really delivered for me. So yes, I do mean REITs when I talk dividend stocks. I'm also talking about older school businesses. I'm done buying EQT. I bought call it a 0.3% of my overall portfolio in EQT because I also own a lot of Chevron. I own call it 2.5% of my portfolio in Chevron. And I own Occidental, maybe 1% of my portfolio in Occidental. And I now own EQT that has a focus on natural gas. So that's where I'm at with EQT, sir. Not going to be a big position. Never intended it because it's risen a lot. Nice. But both, I think CTRE is a solid gain, like appreciating stock. I think they do properties that help the elderly that need healthcare at the same time. They go there and they live there. Maybe they live there for 6 months and they get to charge these high rates for people to stay there. And a lot of it's covered by Medicare. So it's a very good business model. And Vici they own properties that we would see in Las Vegas, big hotel properties. And to me, that scares me a little bit because I keep hearing negative stories about how Las Vegas is struggling economically. All right. So I covered the chat. Let's get back on track here. I think we needed to cover Opera, which is a request. Opera is a software stock. How has it been doing? It's been picking up a bit in the 5-day, up 8%. Over the last month, up 6%. Year to date, not so pretty. It's been sold off. This is a browser business. They're out of Europe. They produce a browser. Now, they're not going to take over and put Chrome out of business. No, but I think a lot of people might appreciate having an alternative browser. And these guys also do a VPN product. Overall, it's a small cap. They have terrific fundamentals, forward P of just 10.3, while this business is a growing business. So I showed how, for example, Apple had a high PE and they weren't growing anywhere near this level of growth. Broadcom, they're growing about this rate and they have a P of 42. So here's a small cap that has a really low PE of 10. They're growing quite well. So we know what great looks like. You got to have high revenue growth. You got to have cash flow. You got to have profits. And these guys are not quite a perfect, great looking stock, but they're a good looking stock. They have good free cash flow margin of 16%, 14% profit margin. These are good, solid numbers. This is a good, solid B stock, not an A plus student, not the one that's like, man, that person's going to, or that student is going to do big things. This stock is going to get it done. And they'll continue to have this growth rate, just being the alternative to Chrome. Maybe they get acquired as well. When we look at their forecast, we have 3 analysts, not a lot of coverage. We have more analysts commenting on a forecast, and they're supposed to grow 15%, 14%. So that looks good. And bring down their PE ratio to single digits. So this is just a very good value play within small caps. Now, when's the market going to start moving this stock higher? I think it's going to happen. I just don't know if it's going to have a long-term appreciation curve here. So I'm going to turn it over to Daryl, who can better cover that area of thought on Opera.
So they do have a 200-day that's declining, a 50-day that's declining. It looks like they're trying to test the 50-day right now after being under the 50 days since the 7th of October. They did have a death cross where the 50 crosses to the downside over the 200, and that's a declining 200. That makes it a death cross in the strictest sense of the term. The 21-day is flattening out, but they do have a steadily increasing RSI that's in bullish territory at the moment. The PPO had a bullish crossover in bearish territory on the 21st of November, but it's not yet in bullish territory. And definitely in distribution mode all the way until November the 19th. And they've risen a little bit of accumulation and kind of trading sideways. So I think they're going to battle this 50-day. I would like to see them break out above that to have any real sense that they're going to continue moving forward. I don't know what started this drive to the downside, because they had been trading pretty much sideways for months, and then all of a sudden took this big dive, which was 30-40% drop.
So Death Cross, holy smokes. Now we are talking like you would see an episode of Game of Thrones. Take us through Death Cross. And when do we see stocks that had a death cross? Like, how long does it take for it to like maybe come back? Or is it possible that a stock has a death cross, gets sold off, way oversold, and then it comes back and rewards those investors that said the market was wrong? So what are some likelihoods from this point on this stock?
Yeah, the death cross term is a little scary, but to me, that's actually a good time to buy stock if you believe in the company and what they're doing, and you think their fundamentals are good. Because when we had the death cross, it took about 2 or 3 weeks when it finally hit the bottom and started recovering. So this has been a slow and steady recovery, which is probably somewhat of a good thing. But in order for the 50-day to start turning around and going back up, you have to have some prices above the 50-day, because most of them, if I just measure back from there to there, there's 32 periods of 50 days, 32 of 50 that are below the 50. So it's got to get above the 50 for quite some time for that 50-day to start turning over. The 200-day will continue declining, and it'll finally match up, and you'll get what they call a golden cross. And
Whoa.
by that time, they've kind of already recovered. So if you believe in the company, the best time to buy them is after these death crosses.
Very
And
good.
how long it takes, it all depends on the stock. Seems to be a slow and steady recovery. If you have more of a V-shaped or a real strong V, they recover faster. This one seems to be slow and steady over the last 3 weeks.
And the space around Opera, which is software, and I'm going to come back to my screen so I can give everybody a quick visual, right? I'm seeing that the software space. So this space, right? I have invested in software companies for 30 years. I've made a lot of money in this space. So when I have witnessed the market was like, no, we just want to spend in the data center. We just want semiconductors. Yeah, these software companies that make a lot of money, keep growing, have terrific moats. We don't care about that. It was a little bit of disbelief, but I think the whole theme around software stocks is changing. And I think the software space is proving those AI theories wrong. Like, hey, we're not going anywhere. We're into it. And in a couple months, when everybody does their taxes, we're going to see massive returns of users. The TurboTax product is phenomenal. I've used it for 30 plus years. Salesforce growing, Adobe growing, and this company that does the browser is also growing. So their fundamentals, even discounting it by 10%, which is a high riskier discount rate, and just looking at their cash flows, the cash flows are more valuable than the current stock price, okay, by 45%. And the earnings per share, when I give them a fair 18 PE for a company that's growing, great, good margins, 51%. So I was an owner of Opera. I decided to sell some stocks, and Opera, kind of a little bit of a Game of Thrones kind of episode. I forced myself to sell a couple of stocks. Every time we hit like market highs, I'm like, you have to sell a couple of stocks. And Opera was one that I voted out. I had to get it off my portfolio just as a discipline of getting rid of some stocks, because I own a good number of stocks. It's not like I own 5 stocks and have to pick one out of 5 to sell. So Opera, I think, is fundamentals look great. If the market continues this upward trend on software, it should do great. But there are terrific choices in software. Software stocks look fantastic. We talked about Adobe. I talked about Salesforce, Intuit. You have terrific opportunities in software. It is a space that I think 2026, there's going to be a lot of money made in software stocks. So thanks for asking about Opera. And I hope you found the analysis interesting. We've got a new member in Pierre. Pierre is a new member. It's the first time that I've noticed him comment on a stream. So thanks so much for being a new member, Pierre. And he wants to look at Rally, which I think is Remitly. We've gone over Rally a couple of times. And I know earlier in the week we went over it. And they do the provision of digital financial services in the U.S., Canada, internationally, offers cross-border remittances and complementary financial services. Got it. Take a peek at their website. This is their website. So if somebody from Brazil wants to send money to somebody in Mexico, that kind of thing is what you do. Somebody in the U.S. wants to send some money to somebody in India or vice versa. Here we go. That's what Remitly does. This space is a space that is in transition. You had the old guard is like Western Union. They've made a lot of money from this space. Now, this space is being threatened. Right now, it's a theory that stable coins and may take market share away from companies like Remitly. Now, I think stable coins have a future. Not going to argue that they don't, but I think the adoption is going to be slower than what maybe crypto enthusiasts would want to think. Crypto enthusiasts, and I'm a crypto investor cautiously. I've invested since 2017. So it's not like something that, hey, I started doing 2 weeks ago. But I'm cautious because the adoption rate of crypto is just going to take a little longer. Most of the world, even if you went to 10 average people, you said, what do you know about crypto? They'd be like, I know nothing. Maybe 1 out of 10 might be like, well, I've heard of Bitcoin. And so most of the world's going to be like, hey, you need to package this so it's easy to use. Remitly is packaging an easy to use way of getting money to somebody that maybe a relative, somebody you care about, or a business transaction with lower fees. It's a small cap. It's been under pressure. Is that pressure justified? Is it logical? Is it rational? These guys are growing nicely. They are small, but they keep growing. You're growing at 31%. That's a good growth rate. Margins are tight because there's not a lot of money made. You have somebody sending money. It's not like, you're giving them a service that's, like a delivery service, right? Somebody had to get in a car and deliver a product. No, this is all systems based. Computers are taking money from somebody on one part of the world and getting it to another. So the margins are not fantastic. This is not what great looks like. The margins are tiny. If you want to compare what great looks like, we look at Visa, right? If you want to see what great looks like, and I'm put myself through a little bit of a difficult emotional episode here because I thought about buying Visa a week and a half ago and I didn't, and now I have to deal with the stock going up. But let's see what great looks like. Visa is in a similar space, 97% gross margins, 49.6% profit margins, 54% free cash flow margins. Phenomenal, which is why they have a market cap of $600 billion. Now, when we look at Remitly, they're not like what great looks like in this space, but they're a good business. So that'll always be kind of a low ceiling for them. They've been sold off. When we look at their forecast, will they keep growing? 10 analysts cover it. They think it's highly discounted. They believe the company will grow in 2026 by 18% and then 16%. Their profits are going to expand. So these numbers look okay. They look good. They don't look fantastic to me. They look okay. I think the margins are tight. It could do well. I think it has some headwinds, if anything, just from a psychological perspective for the market to get comfortable with. And over the last month, it's gone up nicely. So I don't have a ton of conviction behind it. I think it's a good stock. It could work. And let me kick it over to you, and then I'm going to update my evaluation on Remitly. We can come back to me once you're done.
Yeah, so this chart's in trouble. It's been on a downtrend since the 14th of February. The 200-day is rolled over and declining. The 200-day has dropped down below this trend line, which we have connected to two places. They had a big sell-off on the 6th of November. This is going to be a point of resistance. They did come up and cross above 3 days ago, and then started on their way back down, almost got back to that as a support level. Looks like today they're breaking down through that, so it's going to become resistance once more. The 21-day is increasing. It is trading above the 21-day and the 50-day, but the 50-day is decreasing. I see 3 or 4 points of resistance here, actually 5. So you have the one where it's currently trading. You have one at this gap support at about 1571. You have one at this high. You have the 200-day, and then you have this trend line. So there is a lot of resistance this company's going to have to get over. The stock's going to have to get over to reverse this downtrend. To reverse this downtrend, it has got to consistently close above this downtrend line. They have had an RSI that was pretty oversold. They have moved out of oversold territory. They've crossed above the 50. They did get into overbought territory 2-3 days ago on the 10th. They had 3 days of above average trading. 2 days were buying, 1 day was selling. We're still early in the session for today. The accumulation and distribution has really got me concerned. I mean, that is just down. Money flow has been pretty much negative for months here since June. It is in positive territory right now, but it's already starting to level off and flatten out. So I don't know how long lived that is going to be. I think Remitly's got some work to do.
Yeah, it's a stock that's a small cap, and fundamentally, it is discounted. It's discounted by 30% because their cash flows are really good. It's just they're going to have to push through a couple walls of concern, of fear, of doubt, and it's a small cap, so it's going to be hard for it to get the attention that could really propel the stock. So it's discounted. Will it flourish going forward? It's hard to tell. It's had a nice little rise here, but these small caps, they could catch short-term bids, and if you're in the right one, you can really just do great. But Rally is not a stock that I have a ton of conviction behind. I just see that there's some factors that could really hurt the stock. And those are my comments there. I think Bo put in that Wise might be a pretty good idea to consider. Thanks, Bo. Good to see you. As opposed to Rally. But that's our analysis on Rally. Thanks again for being a member. Good to see you on the stream. Let's keep rolling. We're going to head to Carvana. We've got a list of stocks that include LNTH, Dow, NXT on the list, but we're going to go to Carvana next. Let me just take a peek at the market. Wet stocks. Whoa, man. Oof. This is ugly. Yeah, it's pretty ugly out there. It is ugly. So it's a down day. So let's see here. So the NASDAQ down. Even the Dow's down a little bit. The VIX is up. Okay. So NVIDIA's holding their stock price. Interesting. And I think NVIDIA has a small discount at this time. I might pick up a share or two or maybe 3 of NVIDIA. Google down. Meta down. I'll probably buy some Meta shares. I own a lot of Google, or I would buy more shares. Looking at this space, I own ASML. I wonder how they're doing today. It's a big cap. It's gone up nicely over the last 6 months, but maybe it's gone down. Look at Adobe standing up tall. Even CRM up a little bit on a day where you have this kind of red. That looks good. It's a very good sign. Let's get some more capital into software. GE is picking up a nice bid. Look at that. Everybody's buying a Coca-Cola today. United Health standing up tall. Lilly standing up tall. Tesla's up. Okay. So Procter and Gamble. That's why I bought the stock. On days like this is a nice dividend idea, by the way. Procter and Gamble, Colgate Palmolive, Kroger. Those are my 3 stocks in consumer staples. Costco, not getting off the mat. It went into the ring with Mike Tyson yesterday. Well, not quite. It didn't get destroyed. Going into the ring with Mike Tyson. I think Broadcom went into the ring with Mike Tyson. First couple of rounds, it did okay. And then Iron Mike Tyson landed a pretty hard right. And Avgo hasn't been the same since. So man, these markets are good because it makes investors take a step back, and valuations matter. Okay. We don't have stocks that go up and up and up, and they just keep going up because they keep going up. That's the reason they're going to go up. Let's look at one of my favorite fundamentally unsound stocks, Oklo. Over the 1 month down, it's not too bad. It's still doing great. Let's go into I'm a fan of Rocket Lab. How has it been doing? 1 month has been doing great. Look at that. It sold off, then it made it all back. Incredible. So the risk takers are still taking risks, but how about CoreWeave? CoreWeave's been a stock that I've been commenting may struggle. And it's had a good year to date because it just ramped up after its IPO, but it has been meandering down. All right, so that is the market we're dealing with. I think it's constructive. Seeing some capital leave this space. This space has flourished for 3 years. Flourished. And this space has done okay. So rotating into financials, industrials, healthcare, real estate, that would totally make sense. So, all right, Magical Self wants to talk a little Clorox. We can look at Clorox. That is a staple. It's is it a staple or is it a material? We'll find out when we cover it. We will put it on the list. Looks like got some more comments here. A-Lab is down 10%. A-Lab is like just a crazy stock. It goes up and down, but it does have a downward trend that I'm worried about. So I'm going to keep an eye on that. What is a good strategy based on the charts of NVIDIA? So I can tell you what I'm doing is I'm picking up shares of NVIDIA because I think it reminds me of Apple, and I don't know that I'm going to make a killing on NVIDIA. I think the big gains are behind us, but it's a discounted stock. And on days like this, it's behaving the way I would expect, which is NVIDIA is the king. NVIDIA is got tremendous value intrinsically and strategically. It has the patents on the best high performance technology of the time. It continues to keep or extend its dominance by creating new chips that are even better and better and better. And the market is buying it up. And now it looks like the Chinese market's going to be opening up to some extent for NVIDIA. That's going to help them. So I'm picking up shares of NVIDIA. I'm a dollar cost average investor. So I'm picking them up over time. So that's my comment there, Dwayne. And I think that's the same comment. And we got Clorox on the list. Magical Self. All right, back to the action. We are on to Carvana. What's happening with Carvana? Before I jump in there, Bo. Yeah, I have how many shares of Google? 1,033 shares of Google. So it's my biggest position, and I'm glad I bought into it, believed in them, and it's been a good overall winner in 2025. Great to see you, Bo. All right, so we are on to Carvana. Carvana's heading up. Market's going down, but Carvana just keeps going higher. Incredible. Now, this stock was close to going bankrupt, so it was way down at $4, and now it's at 480. Oh man, phenomenal. And this, I think Carvana to some extent has become a meme stock or a popular stock for risk takers to jump into, because they really want this. They look in the rearview mirror and they're like, holy smokes, this thing went from $4 a share to 480. Maybe it goes up to 1,000. Maybe it will, but maybe it won't. Market cap 105 billion, revenues of 18 billion. I see the first problem, which is they're in a space that is a very low margin business. Okay. Forward P is 70. These guys are not NVIDIA. Now we know what great looks like. High growth rate, high margins. These guys are growing. Okay. You got the growth rate. No, let's take a look at your margins. Gross margin. The ceiling is 21. Okay. Profit margin, 3.44%. Now, for a car business, it's good. But for a general business, it's not. It's not Visa. It's not NVIDIA. It's not Apple. That's what great looks like. And this is not anywhere near great. Free cash flow margin of 3%. So it's not to demean Carvana, because I'm kind of a fan of what they've done. They do it their own way. Cool. It's a big success story out of Arizona. I just want to be realistic of what this business is really worth. And we look at their free cash flow. They free cash flow $546 million. Their yield is 3%. Okay. So if you bought a treasury, low risk treasury, your yield would be more than 3%. So why would I buy a high risk stock where the yield is less than the treasury? So just a reflection point there. The stock's gotten really, really heated up. 22 analysts cover it. They think it's too expensive. Let's look at their forecast. And their forecast calls for good growth. And the profits based on earnings per share should expand. The P ratio is really high. The market's really bought this one up. It's become a meme stock. This one is just not investable for me. I think this is going to end poorly because it's the car business. It's been around for more than 100 years. I'm not expressing that kind of as it's factual that it's been around for 100 years. And it's priced 74% too high. Oh man. Because of it's got a low ceiling on margins. They could double in revenue, and it doesn't make a meaningful difference to the free cash flow or the profit because it's so low. It's like, oh man, you guys have to go up 20x on your top line to make the pricing work for your stock. So Carvana is a total sell for me. I just look at the business and I'm like, there are 1,000 other ways to make money faster than selling used cars. One way is Nvidia, Apple, Google, Meta. I mean, go down the list, and there's a lot of ways to make money much faster, cleaner. What do you think of Carvana?
So this is the full lifetime of the stock. They are trading at all-time highs. They last reached these highs back in 2021. They're riding the 5-day moving average, but they are at all-time highs. They are very overbought at the moment. Big volume. This was the day they went in, or not went in, but it was announced they were going to be in the S&P 500. So that's going to keep driving the prices higher for a bit. They did have a bullish crossover on the PPO back in November. They are in positive territory there as well. Accumulations at a 52-week high. Money flow is positive at the moment. If you're entering it here, keep a tight stop loss because we don't know how long it's going to stay in this overbought condition. It looks like it may stay for a month at a time. Here's about a week. Here's about a week. So it doesn't stay there very long and then starts trending downward. So if you're buying it here, make sure you got a stop loss on it, would be my advice.
Yeah, Carvana's, man, it's for risk takers, and looks like it's been collecting some good investors, but you got to pick your lane when you invest. What kind of investor do you want to be? Do you want to, like, for me, I'm in the lane of fundamental analysis, picking the right time to buy, and then doing so. And if a stock doesn't have the right fundamentals, but it's really caught up in a pretty interesting story like GameStop, or you name the stock that has become a meme stock, I'll let somebody else invest there because it's their game, not mine, and I'll move on. Shadow Guy, good to see you, Shadow Guy. He's in a different symbol than I am. I'm a GOOG investor, and he adds the L. I think we've had conversations about which is which, and I can't tell the difference. All right, so we're going to go to Lantheus Holdings. This stock is on the move higher. It is going higher, folks, and it's had a terrific 1 month. Now, some healthcare stocks have been beaten up pretty hard. They're small. This is a small cap. Revenues 1.5. We're coming off Carvana, so we're going to see how different these profits are for a healthcare company like these guys. Lantheus develops, manufactures, commercializes diagnostic and therapeutic products that assist clinicians in the diagnosis and treatment of cancer, and other diseases worldwide. The company offers Definity, an injectable ultrasound enhancing agent used in echocardiography exams. I'm familiar with this, right? You take this substance and then they do an ultrasound, and then they can see, like, hey, what kind of blockages and stuff they got going on. All right, so what's been the recent performance of this stock? They're growing 18%. Looking at the quarterly, now this is a little concerning, right? Slow. It contracted slow. So little concern there. Little concern that trailing 12 months is only 2%. Now the profitability is better, 62%. Profit margin is 11, 27. So you see that the profitability has actually come down. Look at that. So that's concern. So double concern. 6 analysts cover it. They are in agreement on price targets. Their range is pretty narrow. 16% discount. Now, these guys are going to be stable, not growing a whole lot, but then they're going to start growing in a year or two. And maybe the good positive news is that they're coming out with some type of new treatment drug that is going to go commercial in about a year's time, a year and a half, and really make an impact on that top line. That's what might be creating the enthusiasm in this stock. And not a bad time to be in it, because as more investors recognize, hey, this is going to grow, this stock's going higher. It's going to expand its profits. PE ratio is going to be in the single digits. Not a bad time to be in this stock, because as the stories come out that, hey, they came out with some drug, let's take a look at their website. How you doing on time this morning, Daryl?
Okay.
All right. Because looks like we have a lot of demands on stocks. And I wanted to kind of dive a little deep, just try to figure out what's happening in a year or two with this company. So, press release. You know, I keep doing this to myself. I got to go to Gemini. I keep searching around websites, and I keep forgetting that AI can be my asset to do that. So Lantheus is significantly expanding its pipeline, primarily in the radio pharmaceutical space for oncology and neurology. So this is a new cancer screening test coming out in 2026. They've got an Alzheimer's disease imaging. I'm not going to call it a treatment. It's a diagnostic product coming out in 26. So they have a pipeline, folks. So this pipeline is why analysts believe this stock is going to grow. It's going to grow by 13 and 12. The stock is really sold off. Okay, it's sold off for about a year. And it's beginning to catch some investors. And I think the enthusiasm will continue to expand because there's some real meat on the bone here. They're launching new products. These products are expanding revenues, organic growth. It's a very good story. I like Lantheus. I like where they're headed. It would be a buy stock in my book. Mike, the dividend investor guy, is already in. He's comfortable. He's sitting on a lazy boy, just watching the stock rise, sipping on a Coca-Cola, just enjoying the gains. What are you seeing on the charts for Lantheus?
I'm going to start off with the drawing a trend line. And the first one that I looked at would have been about right here. So it broke out above that and then consolidated sideways, came down and tested it, and is now moving off that line. So now that it's done that, I'm going to set it to that top, and we'll save the chart for here over the 1 year. 21 days moving up, 50 days moving up, 200 day is still declining. For that to begin reversing, you've got to get the price above the 200-day for a period of time. So we have broken above the trend line. We haven't moved into overbought territory since March. It did come up and test that 70 line, came down and tested the 60, which shows some strength, and then bounced off there. We're currently at 72, so we're just now moving into overbought territory. The PPO is looking pretty good. It's in bearish or bullish territory. Accumulation looks good. Money flow looks good. It is going to find some resistance at this 200-day. Let me draw one more annotation just so you can see how important these trend lines are. So if I just, I'll pick this low. Well, let's see. Maybe one that's a little higher, and I'll draw that across there. So notice that the 200-day, let me save this. Notice that the 200-day is also at that trend line, which traces back to the high that we saw here and a high that we saw here. So you have at least a couple points of resistance that it's going to have to battle out here and see which way the market takes it. If it can cross above that 200-day and sustain that for 3 to 5 days, that would be great. Breaking above this horizontal trend line would even be better. So it looks like it's making good progress today. It looks like it's up about 5.8%, 5.9% this morning. Looking pretty good at the moment. Just keep in mind these resistance points. It's going to come into play here.
All right. So are you all square there? Sorry, I had to take
Yep.
a phone call.
Yep, no
All right.
problem.
So Lantheus looking good. All right, let's keep moving. We've got, we got like 6 stocks to go. So we'll move quickly. Next, Power. This stock I looked at yesterday, it looked really good. And the question was, what kind of position size, am I thinking? This stock's really gone up. And this is while, right? Solar has been under pressure. These guys do solar tracking technologies and solutions for big scale solar. Like if you look at some of these arrays that they're putting in the desert, it's like, don't think about football field, think about like cornfield. Some big solar arrays. And these guys have technologies to capture that sunlight, turn it into power. Well, power is in big demand right now. So these guys have been growing. And when you look at their fundamentals, the cash flow is just immense, really good cash flow. So I think that this business is going to do well for a long time. It's not like we're going to get down the road 5 years from now and it's going to be like, oh, we don't need electricity anymore. No, if anything, it's just going to, the demand for power is going to continue to go up. So I'd probably start a small position because it's a small cap. Small position to be like a quarter to a 0.5% of my portfolio and really study financials on it each quarter, understand where they're going, try to understand the competition, and then make decisions maybe to add 0.25% of my portfolio each quarter. Maybe a couple years from now, you end up with a full 1% of a portfolio position, 2%. But it is a smaller cap, right? And it's it comes with its risks. It has gone up a lot, which has an impact on my thinking, where you have a stock that's really done great. Will it continue to do great? The fundamentals say that it's worth more. It's pulled back, so not a bad time to consider it. It's they put it in technology, but I kind of think it should be an industrial, by the way, because it's solar, right? Solar gets put in technology. It should be an industrial because it should be right alongside GE that produces turbines and all that stuff. That's really where it belongs. So that's my thought on position size. Any thoughts? It's kind of totally new to you, Daryl, but if this was a stock you were thinking, how would you establish a position size for Next Power?
Well, it is trading at the 50-day moving average right now, which is that increasing? Yeah, it's increasing. The 50-day is still increasing, and it's been trading right at that since November the 15th or so. The RSI is in negative territory, and the PPO is in negative territory. Accumulations at a 52-week high. Money flow is positive at the moment after being underwater for at least 3 weeks. So this would be a good place to enter, like you said, small, and just grow it over time if it's something that you believe in with the company. But they're trading at a pretty good price right now and where they have support.
And another thing I like about, Next Power is, it's a stock that you individually as an investor can establish kind of an advantage against the market, which is, read up on the stock, keep up with it, and know that, hey, they just landed a project where they're going to install a bunch of equipment, in this particular area, because the market's not going to pay a ton of attention to a stock of that market cap. So it's a good looking stock. Good luck. I think Magical Self wanted to ask about that. Mike, the dividend investor guy, wants to talk a little Dow. Dow is in materials. We talked about materials, how materials have been looking good. This stock has been beat up. This thing has been bullied by the market for some time. And this stock has been around for a long time. Its products, mostly chemical, end up, when you look at a car and you look at the beautiful paint color, it's probably Dow that's involved there. Many, many different products that their chemicals go into another end product. Now, they've been under pressure. Are things turning around? The 1 month looks pretty good. Very nice dividend. Very nice dividend. 5.7%. Quarterly. Doesn't look good. Negative, 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 and negative. Last 4 quarters. Holy smokes. They're losing customers, or maybe the price of the commodity they're selling has really gone down. Negative cash flow. Owie. Situation's not looking good. Gross margins are really low, and they've gone down over years. So maybe they are seeing competition from China. Chinese substitutes are coming in, undercutting what Dow is selling for, and it's really cutting into their margins. Look at their margins have gone down from 5% to 1.7%. So this one's looking like a really sick puppy. Man, I don't know if this puppy's going to make it. Let's look at their forecast here. We got 15 analysts covering it. They think it's discounted. And in 2026, they should see some growth and a little bit better growth. They should return back to profitability in 2027. For me, I'm staying out of Dow. I'll give it a couple quarters. I'll show up late to the party. But what I don't want to do is show up too early and be stuck in a stock, because this thing has not gone higher. Now, if it goes up to $28, $30 a share, it starts showing better financial reports. Like, it's coming up January 29th, and they're like, hey, we're growing. Hey, we're seeing better commodity prices. Okay, I'll be a buyer. But until that happens, I'm going to stay out of Dow. I'm going to double check their debt to EBITDA. 3.99, above 3. One more factor that worries me. They get bigger, they can correct that, but they have some debt involved. So I'm staying out of Dow. Too much risk. Market really doesn't like it. They may be seeing intense competition from China, and that isn't going to go away. So Dow is a sell for me. I'm going to stay out of it. Let somebody else invest in it if they would like to. What are you thinking on Dow?
Yeah, I sold out of this one quite a while ago. When I started seeing these declines, I moved out of it. And you asked earlier about the death cross and how long they can last. This one has been in that condition since the 23rd of August of 2024. So this has been a long term in the death cross world here, and it doesn't look like it's in any position here in any short term to start reversing that trend. They do have a positive RSI at the moment. They are above the 60 line. They are in bullish territory on the PPO accumulation. This is over 3 years, by the way. So this has been in distribution for pretty much at least the 11th of March of last year. This one's got some work to do. When we get that report from FactSet, I'll probably have more to say that on our Monday stream.
Mm-hmm.
We can cover that report and see what we think about it. But I do remember materials being in the number one spot for the 11 sectors next year.
Yeah, I've seen that as well. I've seen it in other reports. Thanks, Daryl. So we're going to move a little quickly through 3 stocks that remain. We've been streaming for a little over 2 hours. Great stuff today, everybody. Thanks for tuning in. The Clorox Company. This was a request that came in. This is a consumer staple. This is a essential that people buy to disinfect their homes, keep their homes nice and clean. They have a range of products. And these guys, market cap 12.7 billion, revenue 677. The P ratio is 16. And this is a business that's not growing. So that 16 seems a little pricey. Dividend looks really good, 474. So if you're looking for a dividend stock, this one might be an idea. The dividend's gotten really high because the stock price has just been beat up, really gone down. When we look at the forecast, you have 12 analysts covering it. They say it's nicely discounted. What I do like about Clorox is in the current year, we're in this year, fiscal year 2026, that ends June 30th, 2026. But next year, it's going to start growing and it's going to keep growing and the profits are going to really expand. So I think it might be a little early, but we're getting close to the perfect time to consider Clorox, because once investors put their heads around these numbers, the stock's going to rise if they can execute. So for me, I'd probably wait for the next earnings to come early February. And if they execute well and guide that, hey, we're going to start growing, this would be a pretty good little idea here in a staple that's going to pay a nice dividend. So I'm going to put Clorox on my watch list, but that's all I would do right now is just watch it and watch their next earnings, see how well or how poorly they do, and then go from there. What are you thinking on Clorox?
Yeah, this is a company that I don't think's going anywhere. They just keep doing what they do. But they are trading at prices we haven't seen since 2018. So people were using Clorox products like you can't believe during COVID. We were wiping down everything, including ourselves, with Clorox. So anyway, it got to a maximum price, but now we see It's come back down to prices we were seeing in 2017, 2018, and they do have a really good dividend yield, paying $1.24 a quarter right now. So Staples, after being beat up for this year, I think are supposed to return to like the top 3 spot next year. So if you're looking for income at a pretty good price with a solid company, you're looking at it right now, I think.
Good stuff. So, so Paul, appreciate the comment. Is doomsday here? Looking for a circuit breaker. Man, if you're a Broadcom stockholder, you certainly are. It's down 11.4. Ouch. Some pretty intense red here. Well, at least, we're getting near Christmas, and this red around Christmas is the right decoration. Google's down, Meta's down. I mean, some big caps. The market is having a day when, you know what? This is, in a way, this is good. Let's get these stock prices down. They were expensive. And let's look for opportunity. Not a bad day for me to add Meta. Not a bad day for me to add potentially ASML, maybe some TSM, some NVIDIA. Not a bad day to add some Amazon. Not a bad day. Well, I own so much Robinhood. I can't add more Robinhood. It's just I can't add more Google. I own too much. They've done great. Great job, guys. Yeah, you're going down today. No big deal. I'm not sweating it. Interesting, man, and it's pretty concentrated. It's a semiconductor that's getting smashed, and other spaces. United Health standing up tall. You keep going higher. All right, let's get back into our list. We're down to the last two. The two remaining stocks. Dexcom is a med device company. I know them well. They're down in San Diego, and they do these glucose monitoring devices you attach to your body if you're a diabetic, and it helps you manage your diabetes. Really innovative product 10, 20 years ago, but the weight loss drugs have kind of disrupted this space, right? Weight loss, people that are overweight can lose weight, control their diabetes through that. And Shazam, this stock's really struggled. Will this stock rise? I don't know. I'm a little afraid of it because this whole weight loss thing where people are, taking a pill or injection and controlling the weight may have disrupted Dexcom and taken away a good part of the market. It is a forward PE of 28. Analysts think it's discounted. Let's see if they're growing. They are growing. They continue to grow nicely. Nice acceleration in growth in the last quarter. That looks pretty darn good. So 14% growth is fairly good. This is a $4.5 billion revenue company. So it's not like this little company. Cash flow of $1.062 billion looks good. Decent profit margin. Very good free cash flow margin. I'm liking what I'm seeing. This is solid value. And they're in a space where I think this is a very durable business. People need this device. And they did have competition from Abbott. Abbott was trying to encroach on their space, but they fended off Abbott quite well because they just have a superior device. And these guys, $1 billion cash flow. Based on their growth rate, I like their growth rate. I think this is a good idea. It's a good idea. I don't know if I have a Dexcom valuation, but let me kind of cover what analysts are thinking here, what kind of growth we're seeing. This growth is solid. This is a good idea. This is a stock that is being overlooked, really has seen a lot of selling, but I think the fundamentals are there. let me kick it over to you on Dexcom. Let me whip up a quick valuation on it because I'm interested in Dexcom. I'm liking
Yeah.
what I'm seeing there.
I can tell you I've been wearing the Abbott glucose monitor for probably 4 years. And sometimes, actually, quite often, I go to order it and they're out of stock on them.
Really?
Yep. So, and I'm also on Ozempic, not for weight loss, but for diabetes. So, it's a indispensable little gadget that just sticks to the back of my arm,
Hmm.
and I can read it with my phone. And I have learned ton of good knowledge over the last 3 or 4 years about what really affects my blood sugar compared to
So
other things that I
the
may
most
eat, and
the
breaks
most
your some of
important
your
question I have
assumptions
is,
that you might have.
does it has it made you a better trader? I hope so.
I don't know about that, but sure helps with my blood sugar.
Yeah, a
Um,
healthier Daryl is a better trader. Healthier Daryl is what we want.
there's probably something to that. So they're also in a death cross situation. The difference here is they're leveling off on that 50-day. So if you're buying here, that's okay. But if you really want to get a good entry spot, you're going to pay more. But it's when that 50 days starts crossing back around. So anywhere above this 50-day, when it stays there for more than 3 days or so, that's usually a pretty good entry spot. The 21-day rolled over a bit earlier. That would have also been a okay point to enter in. And we did see a little bit of a head fake right here. So keep that in mind. Whenever I'm buying in areas like this, I usually have a pretty tight stop on it. So we did get to an RSI of about 70. Looks like yesterday we're coming back down and touching that 60 line. We do have a PPO that's positive and in bullish territory. And looks like the stock was in distribution for at least 2 or 3 months, and it's now being accumulated. We can see money flow is back positive as well. So this isn't a bad spot, in my opinion, to start thinking about this one if you're not in it, or if you want to add to it. This looks like a pretty good spot to me.
Yeah, I like the fundamentals that we saw with Dexcom. The growth is there. I think people have really become like, you know, very comfortable with this device, and they're going to be customers for the rest of their lives pretty much. So I like that, thought process. They're going to grow their profits really nicely in the future too. So I just finished the valuation here on Dexcom, and it looks good. The fundamentals looked good. Free cash flow is good. It's growing the business quite well. And I'm probably going to say that long-term growth is going to be better than I'm projecting. So there's a nice discount available on Dexcom. It's not a bad idea at all. I think the market has a theory that maybe these weight loss drugs are going to disrupt Dexcom, but I think that theory is not something I'm willing to co-sign. I think Dexcom is going to be fine, and I think it's looking like a nice investment. So I like Dexcom. Not quite, to a point where I could say I would be a buyer or a seller, but I am very interested. And I'm going to do a little more homework, and maybe on a later stream, I could comment, let you know what I'm doing. Magical Self, Dexcom's looking good. And I'm going to add that to my watch list, and might be a stock that I buy in the future, but we'll see. So thanks for asking about Dexcom. And we're going to wrap up the show with a stock that's just been stuck in the mud, and is incredible that this was the innovator of weight loss. This was the original gangster of weight loss. got up to $142 a share back in 2024. And ever since then, it's just been on this drop. Market just doesn't like it, but it loves Eli Lilly. Loves Eli Lilly. This thing is discounted, but when is it going to rally? I don't know. Don't know. Can't answer that question. It just seems that the stock will not go in the direction it's supposed to go. If I look at the valuation, it's discounted, most definitely discounted. But the market is in love with Eli Lilly. It brings it flowers and chocolates often. And here's the evidence that the market just is buying Eli Lilly and doubting Novo Nordisk. When is this going to change? I don't know. For a while, these two were just kind of neck and neck, just moving in the same direction. Then the market decided in 2024 that it would, investors went to Eli Lilly. I think Eli Lilly's priced too expensively and sold out of Novo Nordisk. So right now, I'm not buying Novo Nordisk. It's discounted. I have no idea where it's going to go next, but maybe Daryl has a better idea of where Novo Nordisk might go.
Okay, so this has been on a downtrend since November of last year. The 200 days started declining. We also have a downtrend line that is attached to 11 December, attached to this high here in June. And then we have another downtrend line, which is connected here and has been tested as support as well as resistance several times. It broke down, traded below that trend line, got pretty close to long-term support, which is this green line around $43 a share. It did actually touch that on one day. So it did actually come down and test that. Got very close here on the 6th of August or 6th of July. 6th of August. It's coming up to the 50-day, which is going to be a resistance. The 50-day is declining. When you talk about death crosses and how long they can stay there, this has been in a death cross since the 22nd of October of 2024, and both the 50-day and the 200-day are still declining. So it has traded above the 50-day a few times along this route, consolidated here. So it's got to break out above this 50 for at least a week. And then it's going to be fighting the 200-day, which is below this or right underneath this trend line. So it's corresponding with this downtrend line, which is a longer term one. So you've got resistance there. You've got resistance at the 50. I'll be surprised if it can break above and sustain that break above the 50-day.
Man, we talked about a lot of death crosses today on a Friday. We got it. Next Halloween will be Death Cross Halloween for us. Okay. Let's cover all the death crosses that have occurred over the last 12 months. Halloween of 2026. I think that'd be interesting. All right. So it is not a pleasant day in Broadcomville. It's not. And it's not a pleasant day for all the neighbors that share in the neighborhood of Semiconductor. So it's going to be a rough day there, but they've had a phenomenal year. But it's really expanded over to Meta, Google, Amazon. Look at that. Just pullback, harsh pullback. Good opportunity. Glad I've got some capital. I'm going to go in. I'm going in and buying some stocks today.
By the way, mutual funds should finish their trading this week where they have to sell off and distribute their capital gains and rebalance and everything.
Uh-huh.
So this is the final Friday probably for that activity. And next week, I expect things to get a lot better after the turmoil that we've had this week. Actually, the last 2 weeks.
Yep. Well, it's good to have corrections that, bring some stocks back to earth. And the reason I say that is we get back to rational thinking, fundamental analysis, things that I use as a discipline is healthy. It's a discipline that the market needs to introduce, because if we keep adding air to the balloon and it pops at a later date, it's ugly. It's ugly for a while. So if we let a lot of air out of the balloon, we're not going to have a big pop. And maybe we do have a solid rotation in some quality stocks like United Healthcare. Merck has been showing up. Merck has been showing up often lately. I keep thinking to myself, no, it's not good enough. It's not good enough, but maybe it is good enough because it has a good forecast ahead of it. We saw Dexcom today look pretty good. And looks like some staples are standing up tall. That's what I say when I cover these is, these don't look all that pretty most of the time. But boy, on a day like this, they look pretty darn good. Pretty darn good on a day like this. And the telecom stocks look really good on a day like this, right? But you don't buy them on a day like this. You buy them when this whole area is green. Everybody's like, oh yeah, go grow stocks. Yay. You buy them when nobody's looking. You buy those consumer staples when they're just kind of like undesirable. Their P ratios are low. Fundamentals are solid. They're not growing a whole, really fast, but they're just super stable, rock solid. Insurance business is looking good today, most definitely. And the credit card business is looking good. So that's where we're at, folks. Good stream today, Daryl. Thank you so much for working overtime. And what's going on with your channel? Let's end on that note.
Nothing new since I put out the Costco video earlier. So starting to wind down for the Christmas break here.
All right. Good to know. I released 3 videos recent, actually 4 to my members. Hopefully you guys find them interesting and they'll come out to the general public in 30 days. But I released a video going over the best dividend stocks that Stock Analysis and I put together. Hopefully you guys find that interesting. Not a bad thing to think about on a day like this. I also put together post earnings analysis on Broadcom, Adobe, and Costco. So, and I think that analysis is valid. My analysis on Broadcom right after their earnings was that it was a sell for me. It's just priced too high. I didn't think it was going to go down. I thought it was going to go up because the market's been on this just in love with semiconductor. But again, today's is a good day. It's a productive day to get rid of some of that just kind of irrational rises to the market. It just keeps going up well beyond intrinsic value. We got to get back to good, solid value out there. All right. So that is it, folks. You guys have a good day. I know it's a rough day, but maybe we can take advantage of it and pick up some shares on companies we like at a great price. And beyond today, just shake it off. If we end poorly, put a period on the trading day, put a period on the investing day, and enjoy a great weekend. Enjoy an awesome weekend. Have some fun and get ready for next week because days like this set up an interesting week to come. And I know I'm going to make some trades today and I'm going to be ready for next week. And we're going to be streaming next week. Let's see what happens. See if there's some good opportunity. I'm willing to bet that we're going to rally toward the end of 2025. This is setting up that way.
Well, yep, I think so as well.
Might be some pain, short-term pain involved, but I think toward the end of December, I think we're going to catch a nice rally maybe a nice rally in the spaces that have turned green recently, like healthcare, industrial, consumer staples. A video that's coming probably this weekend is the best and worst in industrials. I'm going to try to pick out the best and worst stocks that I'm seeing in that space. I'll do some analysis. I'm going to begin doing that tomorrow. So that's it, folks. Have a terrific weekend. Thanks again, Daryl. You have a nice weekend, sir.
Yep. Take care, everyone.
We'll see you guys.